It's 10 a.m. right here in Lagos, Nigeria. Good morning, good evening, wherever in the world you're watching from. It's Business Morning, coming to you live from Channels HQ right here in Lagos. Let's get the top stories that set your agenda now. We see oil prices struggle today after sliding to the lowest level in over 3 months in the previous session, weighed down by concerns of a waning demand in the world's top oil consumers, the United States and China. Brent crude futures advanced by 15 cents to $81.76 a barrel, while U.S. crude futures, that dipped to $77.35 a barrel. Both declined to the lowest since July 24th. On Tuesday, that's yesterday, the U.S. Energy Information Administration will delay the releases of weekly inventory data until the week of November 13th. Crude oil production in the United States this year will rise by slightly less than previously expected, while demand will fall. That's according to the EIA. The EIA now expects total petroleum consumption in the country to fall by 300,000 barrels per day this year, reversing its earlier forecast of 100,000 barrels per day increase. And President Bola Tinubu has approved the appointment of 3 new executive commissioners to serve in the Nigerian Upstream Petroleum Regulatory Commission and the redeployment of 1 current executive commissioner. The new NUPRC appointees include Mr. Bashir Ndabawa as executive commissioner, exploration and acreage management, and Mr. Enorinse Amadasu, executive commissioner, development and production, Mr. Babajide Fashino, Executive Commissioner, Economic Regulation and Strategic Planning, and Dr. Kelechi Ofebu, who is redeployed as Executive Commissioner, Corporate Services and Administration. A statement from the presidency says the replacement and reshuffling are based on President Tinubu's deeply informed assessment of all factors concerning the sector with a view to establishing a regulatory framework and culture that encourages diligence and rules-based business practice across the industry. The appointment is subject to confirmation by the Senate. Let's get a check on the FX market now. The close yesterday, we see the Naira fell to 869 Naira 91 kobo to the dollar. That was yesterday at the official market. This represents 60 Naira 89 kobo loss, or about 6.99%, basically 7% decline in the local currency compared to the 809 Naira it closed on the week on Monday. This is also the second time the Naira has fallen since the Central Bank of Nigeria began to clear some of its FX backlog last week. The intraday high recorded was 1,100 Naira to the dollar, while the intraday low was 700 Naira to the dollar, representing a wide spread of about 400 Naira to the dollar. According to data from the official NAFEM window, Forex turnover at the close of trading was $70.92 million, representing a 19.0% decrease compared to the previous day. We'll be looking out for how the Naira closes today. Remember, we're still expecting some inflows into the market. And the Center for Enterprise Governance has held its second biennial Corporate Governance Enterprise Development Conference with the theme Revisioning Built Environment in Nigeria. The event, which brought together key stakeholders across the real estate ecosystem, focused on its prospects and challenges, as well as the role of corporate governance to small and medium enterprises in the country. Take a listen.
We've made some very good progress in the area of property management, the application of technology in property management. We've not done very well in the area of construction methodology. We still build a lot more in traditional way. So I think that we need to put in place policies, incentives that will help to drive technology adoption, because I mean, if you don't, technology rules the world today, including real estate, and anybody wants to continue to remain relevant in this industry must pay attention and adopt technology.
When we look at various strata of business, whether small, whether nano businesses or small businesses or medium businesses, all of them actually require corporate governance, because when they entrench the principle of corporate governance and how they run things, you will realize that they will eventually be successful, they will be sustainable. You know, if you look at small businesses today in Nigeria, they are one of the greatest employers of labor. So we cannot afford to allow it fail, because if they fail, I mean, a good number of people who are in earning income will lose their income. A good number of people who depend on small businesses for survival, they becomes a challenge.
All right, let's get to our first conversation now. Earlier this month, the U.S. warned its citizens in Nigeria of elevated threats to major hotels in the largest cities of Nigeria. We see the U.K., Canada also issued a warning against non-essential travel to Nigeria. Well, let's gauge the economic impact of these warnings. Joining us is Mr. Ayodeji Ebo, Managing Director, Chief Business Officer at Optimus by Afrinvest. Great to have you on the show. Good morning.
Good morning. Thanks for having me.
Yes, so this is definitely not good news. At a time, the government's trying to reduce, pressure on the Naira and attract foreign investors. How are you seeing this?
Okay, I think the first thing we need to note is that beyond this statement that have been published, what is the current data also saying? So when you look at the security threat index, we rank 9, which is the rating is 9 out of 10. You look at the global peace index, we are about, I think, 141 out of 175. So the reality is that the insecurity problem in the country is still facing us in the face, and they also hold the responsibility to guide also their citizens in terms of the movement. It's unfortunate. Our government they've been trying to do a lot to see how they want to improve on the insecurity problem in the country. However, it's about the result. It's until we begin to see that result, or we begin to see that impact that would impact on whatever indices that has been put out there. So, for instance, we know how politics can also be very rowdy in Nigeria. So when there are elections, and there are some election-prone areas that, if you are not also careful during election, they are always very volatile. So I think caution is good, and it may not augur well for the effort that government is putting in place to have that perception to be able to get in investors. But I feel that if we are consistent and we continue to put all hands on deck to ensure that insecurity is dealt with, is brought to its nails, then at least to a minimal level, then I think we would naturally, even domestic investors, they are also very skeptical. So you look at it in terms of the farming, you would discover that it's affecting food inflation significantly, because a lot of arable land that most people are cultivated in the past, a lot of farmers can't even access some of those areas again, which is impacting on the demand. So I would say that sadly it may not be a good report, but it has also its element of truth. What we just have to do as a country is just continue to channel efforts. We are trying to see how we want to bring down insecurity to its nails to be able to improve economic activities. So once we're able to achieve that, the same report would also change its course. Thank you.
All right, would you say it's okay for other countries to give such advisory about another country? And what do you think the federal government should be doing at this time with this information coming out from most of these top countries?
Okay, thank you. So the first thing is that the government also has a sense of responsibility to provide guidance or provide reports for its citizens. So like when there were crises in Niger, in some African countries, we also issued a report that Nigerians should be careful. So these reports are issued from time to time, and with they hold that obligation. Secondly, what should we be doing now is to just continue to reinforce and continue to ensure that some of the things we are putting in place are yielding results. It's good when you highlight, government would highlight a lot of the strategies that they are putting in place. However, it's until we begin to see results. So you look at in Nigeria across the country, beyond even the political risks that we're seeing, killings, you see ritual, kidnapping. There's this one, also one chance that it may not be pronounced, but it's happening within the communities. You hear different news from colleagues, people running into that. So these are things that put the country on that insecurity map. So it's to intensify effort, and if we see that one strategy is not yielding results, then let's rejig it and let's see what we can do for us to minimize it so that it can also make this country bearable for all of us. So you see, for instance, it's affecting tourism. In the past, remember those days, I've been to Yankari Game Reserve then, I think around 2006. I can't try that now. And they are losing income indirectly. So you see a lot of the tourist attraction where the economy should be able to, now that even Naira is very expensive, Nigeria, we can localize and improve on our tourist system and make it profitable, and also make improve business activities through it. So there's a lot we can do. We are losing a lot by not bringing down the insecurity level in the country.
Definitely, insecurity is a big blow to the tourism industry. And one thing I like about the tourism industry is that when money comes in, you don't have to worry about, repatriation, because the money is coming in and staying in. So we need to definitely promote tourism right here in the country. But with the inflation story, right now, every country has been battling inflation since 2022 into 2023. Paint a picture of how the insecurity situation is stoking inflation in Nigeria.
Okay, thank you. So the first area we need to look at is the food inflation, which is almost approaching 30% year on year. So you would observe that it's a market of demand and supply. Apart from the import element, farming activity is reducing on a daily basis. I was opportune to speak with some practitioners in the industry, and they said there are some areas that in the last 5 years, they are unable to cultivate. And this cuts across. So, and if there's no planting, harvest would be low, and as a result, it will reduce supply, which will lead to higher prices. We also, some prices also across the Niger crisis also impacted, and we had to also close the border, impacted on food inflation, so which is also insecurity. So you would see the role that insecurity is playing in the country, which we have to now pay significantly for. So these are areas that we should focus on. Earthquake crisis, how can we bring them to a barest minimum level such that farmers can go back, they can plant. We're talking about diversifying our FX base. We can be able to also begin to export if we are self-sufficient in some of these items, or if we can produce them to a certain level.
And looking at our local investors right now, how do you think they can position themselves in times like this? And do you see any impact on the local equities market? We've hit a new high yesterday, about 70,600 for the all-share index. What are you seeing?
Okay, I think for the market, we expect that, there may be a bit of market correction. The third quarter result was positive, which drove sentiment. But I think that when we look at what the current prices are currently at, if you are not a long-term investor, you need to also be a bit cautious. Investors are coming in anticipation of foreign investors into this market, but we feel that it may take a while, let's say from maybe if there's consistency in our FX policy, maybe from middle of next year or towards the end of next year, Part of what we are looking at is also if the rates are also dropped in the global space, that we may begin, that would prompt foreign investors to begin to look at the country. But by and large, we feel it's been positive for investors getting at 40% year-to-date return, which is above inflation rates. It's really a positive one for investors.
And looking at the year-to-date gain so far, in the local equities market, going into we're in the fourth quarter now. What are you expecting for earnings? We have seen a lot of earnings come out from major stocks listed. Some impressive, some we could see the FX issue hitting them really hard. What are you seeing for the fourth quarter, and how do you think investors can also position for stocks that might likely do well in this fourth quarter?
Okay, thanks for that question. I think I would like to take it by sector. So you look at the banking sector, we've seen that most of the top banks have posted very impressive results as a result of the foreign exchange gains. However, there's also a policy that has constrained them from paying out that gain as dividend. So it means that what we need to look at is there's what we call normalized trend. When you take out that foreign exchange gain that you see like one-off, what is their performance? It's not going to be as good as what we expect. So we believe that once we see a bit of correction within the banking space, investors can also position, then with focus on those that are consistent in paying good dividend. Secondly, in the manufacturing space, for most of these companies there, because of higher cost of finance, higher cost of production, is also impacting on margin. So we expect that there will be less dividend for those companies. But if you're a long-term investor, it's also good you can position in some of these companies. We feel that the cement industry, with some of the policies that government wants to start using cement for road construction, so in the medium to long term, would also be positive. That will increase demand for some of those companies. But by and large, the equities market is also an investment option to protect yourself against inflation. And we should also recall it's not for everyone. Your risk appetite is medium to high before you want to consider investing in stocks.
And let me take you back to the FX market now. Looking at the close that we saw yesterday, the Naira did weaken. What direction does that give us for the Naira this week? Are you expecting more weakening or a strengthening at some point this week?
Okay, thanks. I think it's based on the traction that we see from the CBN. What we saw last week was as a result of clearing some of the backlogs. So the market is also expecting, if that is sustained, even if not up to that volume of $500 million, but you begin to see action and clear backlogs, we believe that there will be appreciation. So if nothing is done, then all the gains can also be reversed, because what happened we effectively saw last week was speculators and profit takers were the ones that made the market appreciate this significant, almost 300 Naira within 1 week. So, but when they see that the action of the CBN is not being backed up, or their thoughts are not being backed up with actions, then you see speculation resume, and we may begin to see the Naira depreciate again.
I guess we'll have to find a way to impress the speculators so they can go long on the Naira going forward. Thank you so much, Mr. Ayodeji Ebo, MD, Optimus by AfriInvest. It was great having your perspective this morning. Thank you.
Always my pleasure. Have a good day now.
All right, after the break, we'll drill down on the mobile money industry and find out what's happening with cash circulation. That's our next conversation. Do stay with us. This is Business Morning. Welcome back. Well, a new report by the International Monetary Fund, as IMF, says the number of registered mobile money agent outlets per 1,000 kilometers square in Nigeria surged to the highest level in 6 years. The report showed that the number of outlets rose by 137.7% to 1,618 units in 2022 from 680 in 2021. And the number of registered mobile money accounts per 1,000 adults also increased to 225.9 from 191. Well, let's find out the drivers of this growth. Joining us for this conversation is Dr. Obioha Oti, National Vice President, Association of Mobile Money and Bank Agents in Nigeria, and CEO, Upswing Consulting and Training Limited. Great to have you on the show. Good morning. You might have to unmute.
Yeah, thank you so much,
Fantastic.
for having me.
Fantastic. I can hear you perfectly well now. So we see the IMF report shows a big jump in mobile money outlets in Nigeria. Should we say business is going good for the mobile money agents, and we're solving that issue with banking the unbanked?
Not necessarily, but I have to do quite some explanations. I will not say that business is really going well for the mobile money agents, but the report from IMF actually is correct. It shows the situation of things in the country. For instance, a number of mobile money accounts and wallets have been on the increase for a while now, and the number of registered adults per thousand, just like in the report, has been on the increase. Then also the value of transactions with comparison to the GDP is also on the increase. But all that does not necessarily translate to the fact that mobile money agents and everybody involved in agency banking is making a lot of money. The truth about the matter is that there has been a lot of challenges within the system. Let me start with that of mobile money agents. For instance, if you notice, earlier this year in February, when there was a lot of cash crunch because of the issues associated with removing the old Naira and bringing in the new one. So a lot of mobile money agents were thrown out of business. Even recently, there has been reported cases of mobile money agents, particularly those from the northern part of the country. For instance, Kano State, Taraba State, and a few other northern states, especially those in the remote areas, complaining about cash challenges. And if you go to the CBN X, that is Twitter account, you will equally notice that reports like this exist. So there has been a lot of challenges within the mobile money space. However, the only way I can explain the report from IMF is that a lot of adults, especially in the township and even to some great extent in the rural areas, have acquired mobile devices. And you know that the proliferation of mobile devices everywhere in the country now gave rise to mobile transactions, and the fintechs and even the traditional banking institutions are leveraging on it in order to drive financial inclusion. So that accounts for the number of mobile money wallets and accounts that are being created. Then in terms of mobile money agent locations as captured in the report, that may not necessarily be true. For instance, speaking from experience, I used to have over 100 locations myself, but because of the economic downturn in the country, I had to close down most of them. And in fact, as it is now, I have far less than 50% of what I used to have. And the same situation is the same for so many agents that I know. But the truth about the matter is that most of these fintechs and the traditional banks, they keep on churning out solutions. They keep on bringing devices. For instance, one registered agent can have in this location up to 5 devices or 6 devices from different organizations. And so this does not necessarily translate to the fact that the business is really growing based on the way IMF captured it.
All right, Dr. Oti, one question now. With the picture you've painted, right now, I'm sure there's some people that still want to get into this, mobile money agency business. So from your view, is it still a profitable business?
Yeah, I would not say it's not profitable because a lot of people are going into it. But, if you want to look at mobile money agents, you classify them in different ways. For instance, we have the merchants. Those merchants already have existing businesses. They are just supplementing it by the side with transactions relating to mobile money and agency banking. But we have core agent bankers who their only business is just doing the full business of agency banking. So these people are the people that are deeply rooted into it. Now, the people that are deeply rooted into it have a lot of challenges they are facing. For instance, I remember sometime in 2020, within the time of COVID, I used to have, as an aggregator, I used to have over 1,000 agents. And as at that time, if you give an agent 10,000 Naira in order to solve liquidity problems, day-to-day liquidity problems, it becomes a very big amount of money. I want you to understand that most of these people you see doing mobile money transactions in different shops, some of them don't even have up to 50,000 Naira as their capital to do business. So they are having cash challenges. And then another truth about the matter is that apart from the challenges of liquidity, even when you have the value in your wallet or your account, to go to the bank, just like we have observed recently, some banks put limits to how much money you can get from different locations and all that. And if you check very well, discover that most of the agents don't even rely on financial institutions to access the cash they need for daily transactions. What they only do these days is to align with traders, to align with other people in order to, evacuate their cash on daily basis without actually going to the bank. Because most of the time you go to the bank, you spend a lot of time. Then again, some of the locations of these mobile money shops we are talking about are in very far places. I remember the locations I have in Ebonyi State. Sometimes you need to take over 1 hour before you get to the closest bank. I used to have an agent in Bayelsa State sometimes, though the shop unfortunately has closed. So he has to enter a boat to row for a distance of at least 2 kilometers before he will get to the closest place that he can access cash. So there are a lot of challenges for mobile money agents. And in fact, if you ask me,
right, so many challenges.
Yes, I want to suggest one or two things because I know there are a lot of things the government can do to actually help.
Okay.
Yes. For instance, now you and I know that the government is new and they have a lot of policies that they have put down on ground in order to help. And one of such policies I had is this conditional cash transfer, giving money to very poor homes in Nigeria and all that. It's a good idea. But I want to equally bring the attention of the government to the problems of agency banking. If you notice now, one of the easiest businesses people quickly go into these days is agency banking. Almost all over the street, you see agents, with their POS. And most of these people, they don't last 6 months, they will disappear. The only reason why they are able to go into it is because it's very easy to go into, and it doesn't really take much. And a lot of the fintechs and banks, they are all over the place, struggling to, get dominance and get agents who will push their businesses for them. Now, since the government has seen that there are so many mobile money agents that are willing to do this business, there are a lot of things the government can do. Even the government said 8,000 Naira per poor home for 6 months. Okay, now multiply 8 times, that's 24,000. I bet you, if you give a particular, most of these agents 50,000 Naira as capital, or liquidity to run their business, because I have given 10,000, I have given 20,000 when I was running most of the locations at that time, but I've closed most of them down. This can really deepen, financial inclusion, and they equally help the GDP. Like if you notice the report from IMF, the growth of transactions per GDP is not nothing compared to the proliferation of the number of mobile money wallets and the number of adults per thousand, that has acquired mobile money accounts or mobile money wallets. That tells you that it is not really affecting the real sector of the economy. What will affect the real sector of the economy is that if entrepreneurs, people who have entrepreneurial spirit, are empowered to be able to drive whatever the business they are doing forward. If the government can give money to poor people to go to the market and just spend the money, and then that will be the end of it, it is not going to help the economy to grow. So I want the government to really look into this. I have had the opportunity to travel to some countries, particularly a country like Kenya. If you see how the government and the entire ecosystem of the agency banking have managed to drive their own financial inclusion. For instance, in Nigeria now, you notice that some of the agent banking activities you see in urban areas, in cities and all that, if you go to villages, it's not like that. Most of the villages are still backward in terms of financial inclusion. So if the government will channel some of these interventions, towards things like this, where it doesn't really need so much money to empower people as capital, it will really impact on the economy and drive things forward.
Right. A lot of industries looking for government intervention right now in the country, but we see there's a significant increase in the number of fintech companies in the country, with traditional banks also exploring, the fintech space. How is this contributing to the growth of, mobile money agents? Are there any risks with the reliance on fintech? We've heard of stories where funds get trapped.
I think about 2 weeks ago, I was in CBN International Institute. So I was there. I was teaching them open banking and the CBDCs, particularly the e-Naira. And one of the topics we looked at there was whether the idea of open banking drives collaboration or drives competition among banks. And the answers that most of the students gave, you really marvel at it. The truth about the matter is that the proliferation of fintechs is a good thing for the economy, it's a good thing for the country, it's a good thing for the financial inclusion. You can agree with me that even the traditional banks have tried, most of them have tried to form a subsidiary of a fintech company in order to drive certain segment of their business that they cannot ordinarily drive. But there are a lot of challenges associated with it. For instance, recently, some of the agents I know, some of our agents, have had to be cash strapped liquidity-wise because they were not able to access their funds in some of the fintech companies that they are operating with. What happened? Some of this is attributable to fraud, some attributable to operational challenges and all that. So if you ask me, I will say the fintechs are trying, but so many of them are really biting more than they can chew, because some of them really don't have the capacity, because they know that the market is large, because they know that they can really do so much. They try to explore beyond their capacities. So that is a problem, and that's cause for attention, because the regulator, particularly the CBN, needs to look in that direction. Because by the time you look at the market and you want to play far beyond your capacity, then there will be a lot of operational challenges and a lot of failure within the.
Right, I guess play to your capacity. That's your advice to the fintech.
And again, in terms of the traditional banks with the fintechs, the challenge is that instead of collaborating, especially in areas where each of them have their strengths, and try to at least move the economy forward for mutual benefit, you will notice that most of them are struggling among themselves, driving, kind of competing. So it is not really healthy for the economy. You and I know that where two elephants are fighting, it is the grass that usually suffers. And the grass in this particular instance include the agents and the customers who represent the last mile.
Right, right. Thank you for that, Dr. Oti. But another burning issue now is cash in circulation. I've heard some reports of customers not having access to, cash in some states, and some banks capping withdrawals at about 20,000 naira. Are any of your members experiencing this right now?
Definitely, definitely. Particularly, they're not like I told you. Even yesterday, I had to do some, snapshot research, and I discovered that most of those in the south are fine, but most of those in the north, especially in very, very rural locations, they are still struggling with cash. And the truth about the matter is that I've always said this thing: we shouldn't, at this time and age where everything has gone digital, we should not continue to be a cash-based economy. And most of the things still fall back to the government. For instance, during the time I was in a CBN training institute in Abuja, one of the things we're looking at is how we can use the e-Naira to drive financial inclusion. For instance, if the federal government makes the idea of digital currencies, or mobile money transactions, that is cashless transactions, makes it appear profitable to those that drive financial inclusion, because the major people that drive financial inclusion is agents, and the major business that agents do is Kiko, that is cash in and cash out, and that is what gives them most of the money. Forget about some other added services that the banks talk about, opening account, this one, that, and most of those things don't really bring the cash to the agents, and the agents, they specify and they concentrate on the ones that give them money. So if the government can make some solutions like the e-Naira and all that, and some digital platforms, make it profitable enough for agents, agents can drive it. And because almost everybody has mobile phone in his or her hand, so digital transactions will really replace a lot of cash-based transactions, and we gradually move away from that. Countries in Africa have done this so much. Look at countries like Kenya, look at countries like Rwanda. Most of these people have really gone far ahead of us as a country in terms of agency banking and the mobile money transactions. So we really need to look in that direction.
So in your view now, and with what you've been hearing from your members, do you see a cash crunch issue coming up again?
Anyway, I am aware that the Supreme Court gave a decision on the demonetization policy, but I don't know whether the implementation is going to happen. But if a deadline is given for withdrawal of the old currency anyway, sometimes we even wonder which one is the old or the new, because even the old currency now is, it appears to be more in number and more in circulation than even the new one. So, but if there is any information like that, it is going to cause a sudden panic, and they definitely will experience a lot more cash crunch even than we experienced before.
Yeah, we definitely do not need that, because the first quarter was quite tough. But looking at the mobile money agency industry at this point, what are you seeing, going forward? Do you see more outlets, coming up? Do you see the business getting more profitable?
Yes, in Amban, for now, that's Association of Mobile Money and Bank Agents in Nigeria. One of the key things we are looking at is how to bring professionalism into the industry, and equally how to drive profitability for the members. So I see a lot more positivity coming in. I see the horizon getting better and better. The reason why I'm saying this is that recently the CIBN has launched agency banking certification project, which is going to help improve knowledge, because when knowledge is increased, a lot of positive things come along with it. Then again, I'm seeing a lot of touting within the business. What I mean by touting is sometimes you come across the road, you see people running across, running to vehicles, running like if they are hawking the POS, that kind of thing. That is not really good for the business. Because if you look at the CBN operational guideline for agency banking, nobody has to carry POS machine and be running across customers to do transactions. That is a no-no. So when most of these things are streamlined, then something about pricing. For instance, pricing is a big issue. Recently, this year, the association, part of our association, Lagos State, announced some certain issues about pricing, and it raised a lot of doors. Even at the point, we even had to go to FCCPC, to address issues. So when most of these things are addressed properly, I believe that there is a lot of positives in future for the agency banking and mobile money business.
Thank you so much. We'll keep tracking that industry. It was great having your perspective, Dr. Obioha Oti, National Vice President, Association of Mobile Money and Bank Agents in Nigeria. Thank you so much for joining us on Business Morning.
Thank you so much, Ladi.
Right, and talking about money. We have Will coming in now to tell us about more money, making more money.
Larry, good morning. Yeah, always good to have you too on the program. I just listening to the guest, and you were asking him more about the proliferation of this fintechs.
Right.
And I'm saying that it's actually good for them to come on board because the NGX has been thinking about bringing fintechs and all these startups on the NGX. So if they create the tech board and we have this fintechs all around and doing so well, that's going to be a boost for the NGX. And
yeah, that'll be pretty good.
In the system.
But he's advising that the fintechs don't take on too much than their capacity. But hopefully, if they can get listed on the NGX, that's more support for their business. And,
that's more support, and they can raise more finance, more capital.
Because I love the fintechs.
Of course,
they make transactions
so
easy.
At least with some form of regulation, policies guiding them, and so that they know what they're doing and they don't go outside.
Exactly.
So we're just going to kick off with the fixed income market, and we're seeing the Treasury bill, the bond market closing on a bearish note yesterday. Average yield rose by about 13 basis points to 15.8 across the benchmark curve. We saw the average yield, rising at the short and the long ends. And this is due to sell-offs. Investors sold off the March 2025 and the March 2036 papers. The average yield, however, at the mid segment was unchanged. Now look at the activities in the Treasury bills market, that's the NTB market. It was quiet yesterday, quite quiet. Average yield closed flat at about 14%. If you look at that there, just 14.4%. Now across the curve, the average yield was unchanged at the short and the mid segment. It was inched higher at the long end of the curve there due to profit taking on the 352-day to maturity bill. But elsewhere, we look at the almost segment. We're seeing it losing by 1 basis point in terms of average yield there to 15.9% in that segment. Let's bring in Onyejekwe, Ifeoma Onyejekwe, fixed income dealer, UBA, to give us more insights. Good morning, Ifeoma.
Good morning, Will. Thank you for having me.
Oh, great, Ifeoma. So we're seeing this movement in the fixed income markets. Can you just give us more background why this is happening? We're seeing yields really, from single digits to double digits there. We've seen a 16.4 for even at the almost segment there. And I want to say that, can you give us more background? We know that the federal government did, offer that federal savings bond on Monday, and we saw them increase the rates to the highest in a year. How has that been for the market? How has it been able to attract investors? How much of that impact have you seen in the secondary markets? How is it flowing on to other segments of the fixed income space?
So definitely, you're very, very correct in all the information you're giving, and the higher yields has generally been as a result of increased and aggressive government borrowing. So we've seen the CBN offer OMO auctions 2 times already, in October and in November, the first one being in August, and then the previous one being in December 2022. And then they offered very high double-digit levels, and that is to incentivize foreign investors as well as to reflect market dynamics. We also saw, like you said, the savings bond, although the last result at the October one wasn't that much, was like 1.5 billion. And then there is one for this month open. It opened on Monday and it's going to close next week, so we don't know the result of that. But on the general space, we've seen more activities on the OMO space. People have been, trading more there. While in the NCB, the market has generally been quiet, but with a slight bearish stint as traders sell off their lower yielding securities to anticipate higher yielding securities at the auctions. And we have an NCB auction today where 310 billion will be offered, and then we anticipate very high stock rates. The last stock rate was around 13%, although the last OMO was 17.98. We don't anticipate it to jump that high. Probably the 1 year will close around 15, 16 levels. So yeah, we anticipate a lot of subscriptions at the auction today.
So you're anticipating higher rates today, but are the rates still below inflation levels here? But how are the institutions, let's talk about the finance institutions, how have they been able to maximize returns for investors?
So yes, they've been able to maximize returns. Like I said, the CBN and as well the government, the rates and yields have been increasing to reflect market dynamics. Although we don't expect it to jump so high, to meet inflation, because that would distort a lot of market dynamics. But to encourage foreign investors to come more into the Nigerian economy, as well as financial institutions to invest in government bills, we have been seeing an inching up of rates, and that will definitely continue. But we've also seen the CBN employ orthodox methods for that. We've seen them remove the cap of what banks can deposit in the standing deposit facility window. They removed that cap of 2 billion. So we've seen more banks, come to the CBN window to deposit their money, and also, that would help them, that will help them increase their interest rate. Generally, it's around 15.75%. So that has also helped financial institutions.
You're talking about institutions and offshore investors. What about individuals, the domestic investors in the country? Are they involved in this in any way and benefiting from this high yields and able to at least make their money not depreciate while being, stored up in the banks or any of the financial outlets that they have their money saved up?
So yeah, so before the last NTB auction, we saw yields at single-digit levels, and then it inched up to 13%. So we're also expecting higher yields at this auction. So investors can definitely come, and put their money in treasury bills due to the higher yields, rather than investing in other lower yielding instruments.
Thank you so much, Ifeoma Onyejekwe, fixed income dealer UBA, for sharing your insights on the program.
Thank you.
So that's how the market for the fixed income is panning out this week. We're waiting to see how the NTB auction will play out and see the yields that become probably mouth-watering yields, laddie.
Right.
You need to put your money in,
investors.
You need to get investors to put their money in there.
Twist in yes, in the fixed income market at this time.
And it's a safe haven. You're not, the risk lower compared to equities, where
I guess yield is better than no yield.
Yes.
Even though you're not beating inflation. Thank you so much, Will, for the update. That's Will there giving us the details from the fixed income market and the local equities market. Let's get on to more other markets. Now, see Bitcoin has remained stable above that 34,000 support zone. If we look at the screen there, we see the color in the market there. Pockets of red. But green is also quite pronounced in this market with Bitcoin. They're holding the green. But Solana is looking really good. Deeper green color there we're seeing for Solana at $43. Big 5% jump there. With all the FTX drama, we've seen Solana really get back, even though we've seen issues with FTX and Sam Bankman-Fried. Solana is getting better. Let's look at the sentiment right now in the market, 66 points. That's what we're having there. It's lost that 70-point level, but it's still still a very greedy market, showing that investors are still quite positive about this market, looking for more profit at this time. Talking about the fear greed index. Let's look at the top cryptocurrencies we track now. We see Bitcoin, $35,281 this morning, 8 a.m., 0.87%, almost 1% jump there. But we've seen XRP giving up some gains, 2.24%, even though XRP has been on that run from the low, high 50 cents level. It's now trading at 67 cents. Cardano, 35 cents, 0.98% pullback. So we're seeing pullbacks, but the Bitcoin still remaining in that positive territory, while Ethereum holding on $1,878. Let's bring in my guest now, Olokporoku Adeni, financial market analyst. Great to have you on the show. Good morning.
Thank you for having me. It's a fascinating time in the crypto space to talk about the significant advancements that we have now.
Right, and definitely AI. It's all about AI, artificial intelligence. We see OpenAI CEO Sam Altman recently announced some new features for Chat GPT. Tell us about these updates and what they mean for crypto.
Absolutely. As you said, OpenAI has been at the forefront of AI development, and the latest buzz revolves around their newest release, GPT-4 Turbo. It's not just another update, it's actually a leap. GPT-4 Turbo can process both text and images, providing a more nuanced understanding and response capability. This means that within the crypto industry, GPT-4 Turbo could analyze market data alongside social media trends to predict trends and also help improve security by identifying phishing attempts through image recognition. The potential here is truly groundbreaking, and we in the crypto space, we are looking forward to utilizing these new features and seeing where it leads us to.
And talking about these features, do they support trades in any way? We do know about the chatbots and all of that on Telegram. How are these AI platforms, how are they helping traders make profit or better trades?
One of the advantages that these AI platforms have is that for experienced traders and top trading organizations, they can actually integrate this into their trading systems. And you know that if you have used ChatGPT, you definitely know that it's a wonderful platform to utilize in different ways. And according to what I've been seeing and reading from the crypto space, there are a lot of updates coming up that many top trading platforms intend to integrate, like having AI analyze data. You know that in the crypto space, we have our markets just moves based on different trends. So having an AI-backed ecosystem can help traders and also help AI companies. You know that we have some AI companies in the crypto space like SingularityNet, Fetch.ai, and these platforms have spiked this year due to ChatGPT. And with this latest update, there's a lot of potentials, and I think there's a lot of excitement in the crypto space.
Because I'm imagining in my head now a time where AI is trading for most of the investors right now. I'm wondering which investors are going to lose. Is AI going to be that accurate in spotting good investments?
Yeah, obviously, AI is going to be quite good in that, because if you could see the way ChatGPT has been able to, or AI has been able to like transform the content industry, whereby many of these content creators are complaining about similarities in work and all that. Just imagine what could happen in the crypto space when we are able to successfully integrate AI. We even have some trading companies that have integrated copy trading, right, where people are able to trade based on the trades of an experienced trader. With AI now, it's even going to be more autonomous, whereby AI can actually do most of the trades for them. So I think it's an exciting prospect, and I myself, I'm also imagining what could actually happen with that.
Let's just hope AI doesn't get self-aware at this point. But well, we're looking at, I'm sure most investors are looking into 2024 at this time. What narratives are you expecting, in the crypto space to dominate, and what altcoins do you see also playing a bigger role in 2024, talking about the crypto market?
Obviously, 2024 is going to be about Bitcoin because of the halving. For those that don't know about the Bitcoin halving, is an event that happens roughly every 4 years, and it cuts the reward of mining new Bitcoin blocks in half, effectively reducing the new supply of Bitcoin. The last halving that happened led to the spike of Bitcoin going from about 20-something thousand into like 60,000. And we've noticed from trends that Bitcoin halving tends to be surpassed by bullish run. So that's what many of us are expecting. And also, there are a lot of factors that we're looking at. Regulatory shifts. Bitcoin ETF has been the hottest thing everyone is talking about, but we are yet to get any Bitcoin ETF approved by the SEC. There's a lot of expectations about that. With regards to altcoins, then obviously I'll talk about the popular ones like Ethereum. We all know that if Bitcoin should move as we expect next year, Ethereum is likely to make a significant spike. And some people are still waiting for the day that Ethereum is going to surpass Bitcoin on the coin market app. But obviously, and we have BNB and Solana.
Right, so much to look out for in this market. Everyone talking about Ethereum flipping Bitcoin at some point. We'll see if that ever happens. Thank you so much, Oluwaporaku Adeni, financial market analyst. It was great having your perspective.
Thank you, and till next time.
Thank you. All right, so that's the crypto market for you right now. It's still greed right now, and I hope that helps you make your trade decisions going forward. That's a wrap on the program. Don't forget to join us 1:30 on Business Incorporated for more updates and developments in the world of business. Thank you again for watching. I'm Ladi Williams. Have a profitable day.